right, now we want to talk about the 4 reasons the Bitcoin halving will not trigger a big minor capitulation. And obviously, we've covered how we could have and most likely will have a large minor capitulation, but let's look at the contrary opinions. Now, obviously, a popular narrative has emerged in recent weeks, and that is concerning Bitcoin's halving, the halving of the block reward, and how the block reward getting cut in half may trigger the capitulation of miners, resulting in this so-called mining death spiral, a topic we've covered a lot this year, particularly as we were leading up to the halving event. Now, you can, of course, check out our last video entitled Miner Death Spirals Explained, but we'll go over the concepts briefly here today for your benefit. Now, what's interesting in this Cointelegraph article published earlier this morning, it suggests that any calls for a minor capitulation within the industry are overblown, and one should curb any expectation of a widespread minor shutdown in 2020 or the price being brought down as a result. That this is just total FUD, not true. There's no facts behind this. You know, some industry executives have been warning the price of Bitcoin may drop following the 2020 halving event, which took place yesterday. Not just executives, not just analysts, everybody across the, everybody everywhere. Miner revenues are projected to drop substantially immediately following the halving. It's already begun as the block reward was cut in half, and it's going to remain cut in half. It's not going to go back to 12.5 moving forward. Typically, the first to close shop are the over-leveraged and smaller mining operations. They're forced to shut down their machines or operate at a significant loss for an extended period of time on the speculative hope that Bitcoin's price goes up and they can recoup all of their losses. Now, Charles Edwards, he's the digital asset manager over at capitulate.io. We referenced this yesterday, described the 2020 halving as the most brutal in Bitcoin's history, saying the estimated production cost for each Bitcoin is about to double to $14,000. That is nearly 70% above the current price. And he pointed out that during the last halving, Bitcoin was just 10% below production cost at that time. And we saw a 20 to 30% decrease in price. Quoting, "This will be the most brutal Bitcoin halving in history. Production cost is about to double to $14,000. That's 70% above current price. Last halving, price was just 10% below production cost, and price and hash rate collapsed negative 20%. Without FOMO now, expect a big minor capitulation, 30% plus." Now, again, I think that's true. Like, without a strong surge of buying, fear of missing out coming into the markets right now, we should prepare for a pretty large 30% or even greater drop when and if miners begin to capitulate. Like, mentally prepare yourself for that, right? And interestingly enough, like, a lot of respect to some of these people who posted in, but of all the people who posted in, right, there are some interesting things here. There are some interesting comments here. So definitely go check this thread out. And Charles did a pretty good job of slapping everybody down who came out, except for what we're going to cover today, right? And you can even see this in his latest reply. Of all the comments, this is perhaps the best cause for positivism. Oil prices are down negative 50% year over year. Unsure how much of that benefit has rolled into global average electrical costs yet. And he says he'll keep his eyes out for the CoinShares report. But, I know that Bitcoin Jack had posted some stuff, and he, didn't end up, coming back for the debate there. However, the capitulation theory goes a little something like this. As unprofitable miners begin to shut down, they dip into their Bitcoin reserves and begin selling those assets, whether it's to get them through a challenging few months or whether they're exiting the industry altogether because they know that they're just not going to be able to compete. They can't afford new mining systems, right? The S9s are gone. Like, those are not going to be profitable. Those are largely not coming back. So as these miners are emptying their bags onto the market, it adds significant selling pressure, and a tumbling price leads to more miners operating unprofitably, which leads them to shut down or dump what's left of their Bitcoin holdings onto the market, and on and on and on. The cycle goes, in theory at least, leading to what's known as the mining death spiral. Then difficulty adjusts and everything goes back to normal, but it lasts for about 2 weeks. But not so fast, says this Cointelegraph article. The 2020 halving has many more variables at play than just the proposed mining death spiral, which may prevent such a trend from occurring. So they presented here 4 arguments as to why miners may not be tapping out just yet. Reason number 1 is cheaper electricity in China and less demand for energy worldwide. thanks in part due to the coronavirus lockdown. This is the Bitcoin mining map from Cambridge Bitcoin electricity consumption, the Cambridge Bitcoin electricity consumption index. China, of course, is said to contribute nearly 65% of all of the Bitcoin network's computing power, according to the latest data coming out of Cambridge University. Furthermore, the Chinese province of Sichuan is where a great deal of China's mining operations are located, and that province is about to enter into its rainy season, with most of their energy generators relying on hydropower to generate energy. The rainy season, with its abundance of water, means that there is a glut of energy generation in that region expected over the next several months, which gives the large-scale mining farms there the ability to negotiate very favorable electricity rates, and by leaning in to this cheap energy supply, they can effectively ride out the first several months post-halving until difficulty adjustment kicks in and all is well. Number 2, cheaper electricity and energy globally. Now, obviously, we are in the midst of a global pandemic or a plandemic, with worldwide lockdown and stay-at-home orders being implemented and still not being lifted fully. There has been a major drop in electricity usage, with factories and millions of small businesses continuing to be shuttered. Energy costs have already dropped for jurisdictions around the world, which is a crucial part of the equation on whether a miner is profitable or not, the input cost of the electricity. With dropping electricity rates, record low global oil prices, and the industry-leading mining operations having had months to prepare for an extended period of unprofitability, stacking cash aside, stuffing it into shoe boxes, putting it in the shoes, so this article, concludes that the risk of miner capitulation due to energy cost concerns is quite low. The third reason that one shouldn't panic is that weaker international currencies mean lower operational costs. Basically, this means that the global pandemic has basically brought down valuations of national currencies, whereas the revenue from Bitcoin mining is generated in Bitcoin and then sold against national currencies, meaning that because Bitcoin's value has gone up against the world reserve currency, that is the dollar, and because operational costs are typically paid out in the local national fiat currencies, which have gone down overall relatively while Bitcoin has gone up, therefore, the Bitcoin that they are actually selling from the proceeds of their mining buys more. It packs a larger punch per pound, right? So it has more purchasing power. That this actually acts as an exponent in the equation of mining profitability with regards to what they're able to purchase and afford as far as overhead, electricity costs, rent, paying their employees, all of these kind of things. In a better situation than we might otherwise claim them to be. Now, this halving could be the most brutal in history, but it is all just a best guess. There hasn't been a comprehensive report published in weeks to talk about this kind of current geopolitical and economic conditions and how they will impact mining and the price of Bitcoin. That is a quote from Hash 8. Now, the fourth thing, the final reason why we might not see miner capitulation is the mining difficulty adjustment. So when the number of miners participating on the Bitcoin network begins to decline as a result of dropping price and fewer block rewards, the difficulty of mining those blocks adjusts down, which helps maintain a steady block interval and renews the incentive to miners who threw in the towel just a couple weeks ago. And it attracts them back with a return to mining with less computational input required, thanks to that dropping difficulty setting. Now, the network automatically adjusts how difficult it is to mine these Bitcoin every 2016 blocks. That's roughly every 2 weeks with average block time. If the network's computing power, also known as the hash rate, drops off or rises for that matter, the difficulty is going to adjust in a way to stop a cascade of miners capitulating. So a dropping hash rate inevitably results in a cheaper opportunity to mine Bitcoin, slowly bringing miners who were kind of stuck on the bench back into the game. So in conclusion, there are a lot of, in my opinion, good reasons why we are going to see miner capitulation. However, we do want to take a look at these contrary factors, consider the geopolitical situation that we're going to be in, and not discount these other things. Of course, miner capitulation is not guaranteed. I think that we're yet to see the true fallout of the mining reward because it's only been 1 day post-halving. So we will certainly see as we move forward over the next few days. So again, I want everybody to kind of just be educated on both sides of this argument. And let me know, chime in down below. You know, are we going to see minor capitulation? Are we not going to see minor capitulation? What seems more